watching Stockwatch. I'm Zwelakhe, and joining me to unpack your stock-related questions today are Jean Pierre Verster from Protea Capital Management and Zwelakhe Mnguni from Benguela Global Fund Managers. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X at Business Day TV using the hashtag Stockwatch. Thank you, gents. Of course, we will probably spend a significant amount of time on Sasol because there are a dozen Sasol questions. Let's start off with this. Should I now be buying Sasol at 80 Rand? A lot of people have been asking that question at 58 Rand, at 60-something Rand. Now it's at 80 Rand. But they were even asking at 102 Rand. JP.
I think they were asking at above 200 Rand as well, if I'm not mistaken. So Zenate, nothing in today's capital markets day has made me change my opinion. I still believe that Sasol is heading towards a strategic dead end. The gas is running out. If you take a longer view, the high quality coal is running out. Plastics in the US, I don't think is going to be their answer. It's not going to save them. And if you think about the Fischer-Tropsch process that we thought 50 years ago was very valuable, maybe it's not so valuable. Maybe if you take in all the costs, including the environmental costs, and all the people that are getting killed by the air pollution from this process, because it is so dirty, it takes so much coal and it then pollutes so badly, then maybe Sasol has got a negative net present value. So I don't think as a company we'll miss Sasol. I think there are better options there in terms of having a company that produces or imports fuel. And we needed it at a time when our country needed to be self-sufficient. That time is over. So I think Sasol's time is over. So I'm not sure if you really got my opinion there, Zenate. I wasn't sure if I was clear, but basically I'm not optimistic about Sasol.
We got it, and at this point, nothing is going to change your mind, JP. If I remember correctly, when was it? Beginning of this year, when there was the same sense of optimism on Sasol, when we heard that there was an IPO considered for the international chemicals business. It seems that the same kind of optimism is in the air at this point. Of course, they did mention that, but Zwelakhe, they speak about a fundamental reshaping of the business. Do you see this working for them, and is it a fundamental, is it enough? Is it actually a fundamental reshaping considering everything that JP has mentioned?
You're putting me on the spot. I'll probably say that it's given them a bit of a lifeline and certainly gives investors a bit of hope about them lengthening their life cycle. But I do agree with the point that JP made that, they're facing some challenges. However, I am not as pessimistic as he is. I think I see that they're making efforts to address the situation in Secunda, saying that they'll try and clean up the coal before they feed it into the plant. That should lower some of their emissions, hopefully, and still give them a good cost. I think they said they're trying to work towards a $50 oil break even, which, on the long term, it should hopefully be something that could be sustainable. I think the chemicals business in the US, there are pluses and minuses. The feedstock relatively cheap, but on the other side, the chemicals market is flooded by production, so there'll be a price taker in that market. So I do think that in the short term, there might be a little bounce, but long term, they have to re-engineer the business model. They have to come up with something different than just what they've been doing all these years.
JP, specifically for you, to what extent does fundamental and technical analysis justify a Sasol short? At this point, would you still have a short position on Sasol?
So I still have a short position, but it's quite small now.
Yeah.
because I don't like to add to shorts in general. What I do like is when there are these times of hope, these spikes of hope, because that gives one an opportunity to short a bit more. So the important thing is not necessarily the technical analysis, which I'm not necessarily a big fan of, but fundamentally, if one has the view like I have that the long term is not rosy, then you look for opportunities to time when to increase your short. And at a time like this, we might get close when there's some hope to increase the short a little bit. But given my view about the long-term end point of the business, I don't see any reason to close the short anytime soon.
There was a viewer that's, two questions here, but I'll combine them. They said that Boxer has disappointed and should they sell their Boxer shares to buy Sasol shares? But obviously, because these are two different stocks, I don't know if this is a pair that you would want, a trade pair that you would want to do. Zwelakhe?
I'd say it depends on what type of investor you are. If you have a little bit of a gambling instinct in you, I'll probably take that bet, but I would stick with Boxer over Sasol for the long term. The short term, you might make a little bit of money on Sasol as we saw today, but I think the long term, the jury's still out. Whereas with Boxer, it's a question of their execution, how quickly their store roll out does pick up momentum, the new stores. And it may take a little while and that delays their performance, but it does mean that they will perform. Whereas Sasol, you're facing some real sustainability challenges there.
Sticking with you, Zwelakhe, because there's the second part of that question, should I buy Boxer or Sasol for the maximum return in 5 years? You say that Sasol may experience a bounce in the short term, but 5 years is long term, right? And you wouldn't really go into Sasol for 5 years?
I'd stick to Boxer for 5 years.
Okay.
So that's why I say short term, maybe, long term, no.
Yeah, okay. All right, gents. Let's go into another interesting one. Now, we did have... actually, before we go into the interesting one, which is Renergen, since we're on the Boxer trail, we might as well go into Pick n Pay. What could be missing on the share? Massive institutional support on Q4 of 2024 and Q1 of 2025. The stores are a go-to by middle-class government employees at semi-urban developments. What's your view on the short term, 6 to 12 months? That is Pick n Pay, JP.
Sure. 6 to 12 months. Remember, there's a difference between thinking what might happen to the business and thinking what might happen to the share.
All right.
So I can give you a view what I think might happen to the business in 6 to 12 months. But I have absolutely no idea what might happen to the share price in 6 to 12 months. In periods like 12 months and shorter, I am often surprised about share price movements.
Yeah.
They are unforecastable. It's only in the longer term, if you have a view about the business, that the share price over the long term follows, even though in the short term it might diverge. So as a business, I can see continued recovery in the case of Pick n Pay. I can see the management team working very hard. I can see them investing into the stores. I can see them fixing working capital and hopefully grow the top line in real terms. Those are all very difficult tasks. But if they can do that in the next 6 to 12 months, one would expect the share price to follow. The tricky thing is longer term, there's a lot that they need to do and they don't operate in a bubble. They have competitors. So even though Pick n Pay stores might be a go-to to middle-class South Africans, they have a choice. And if Checkers or Spar or some other competitors give you better prices, a better range or better quality products, they'll choose the competitors. So it's an interesting one. It means the management team don't need to just do interesting and good work the next 6 to 12 months, but also for the longer term.
Zwelakhe, your take on what's missing on the share and what gaps they need to close here?
What does Pick n Pay stand for? That's a question I always ask myself. what offering, what proposition are they making to which customers? And I think that is a big struggle. And Shoprite has crept up towards, in some cases, towards the Woolies area, but they're still mopping up at the bottom. So I do think that Pick n Pay would need to redefine their story. But as JP says, I mean, the share price might move on optimism again, like we saw with Sasol, but I think there is a big challenge for them to turn the business around.
All right. Well, an announcement that I did not expect today was a cautionary announcement from Renogen. Of course, that came out at 16:52, saying that ASP Isotopes has made a firm offer to acquire all the shares of Renogen. The first time I'd heard about ASP Isotopes, I think, was a week or 2 weeks ago, when they said that they will be listing on the JSE later on this year. Firstly, JP, what do you think about that? We did see that share price spiking a lot, but obviously not at the highs that we saw a couple of years ago, 40 Rand, 30-something Rand, still at about 12, 11 Rand.
Yeah, very interesting one, Zenati. A very entertaining announcement, I would say. So if one read the whole announcement, you would read that the TRP found some very interesting funding arrangements already in place, and they asked the parties to change those funding arrangements. It is very clear that Renogen was in a lot of trouble. So one can sort of say they're being bailed out.
Okay.
And the reason the share price spiked is because that current Renogen shareholders are not going to get cash. They're going to get ASP Isotope shares that will be listed on the JSE. And if you look at the ratio that they announced and the current share price of ASP Isotope shares, which is listed in the US, you get to this type of valuation. That's why the Renogen share price spiked. However, do yourself a favor and read the 10K, which is the annual report code name in the US in SEC filings of ASP Isotopes. And read a bit what they do, read how they bought some subsidiaries out of business, rescue what they paid for it, and the fact that they actually don't have any viable product yet. They say they've just finished creating one isotope, but they haven't really made any revenue yet.
Yeah.
So it's still very early days. So we went from Renogen being a standalone, a very early stage speculative company, to now ASP Isotopes very soon being a very early stage speculative company listed on the JSE. So the theme is the same, even though the chairs on the ship has been rearranged.
That is very interesting, because I was wondering then what shareholders need to do at this point. But it was also quite interesting because the share initially spiked 50%, but ended up about 38% lower. So I mean, maybe people getting out of their positions. Zwelakhe, at this stage, as a Renogen shareholder, what would you be looking out for here?
Never been a shareholder, and not a company that I like a lot. But I think I support what JP says. In particular, I think a few days ago, there was an announcement around a dispute around the loans with one of the parties. And now there is this transaction that came out of the blue to take the company out. So, yeah, I mean, it just looks very coincidental. And to me, I agree with JP that it looks like a bailout.
Yeah, very, very interesting. And of course, we'll be keeping a very, very close eye on that. Right, gents, let's get to more questions. Let's start off with the Process. Your view on Process's latest deal, I would imagine that is Just Eat Takeaway, if I'm correct. I know Process is a great company, but can they get the discount to NAV to narrow and get better dividends in the future? Zwelakhe. Oh, I'm looking this way.
Look, I think that discount to narrow, you have to talk about selling some of the 10-cent shareholding. I mean, that's a big component of Process. But based on what they are getting on the other side, on the other businesses that they've been able to do deals on, it looks like they might finally be able to get some value back for businesses that they spent quite a fortune on, and there was less hope for money being returned to shareholders, but it does look like they're working towards that. So the large part of the discount will be unlocked through 10-cent sale of shares, but I think that's a process that will take a very long time.
Okay, well, still on that trail, the Chinese tech stocks versus the US tech stocks, which one would you go for, as the Chinese stocks have been in the shadow in recent years? JP?
Yeah, I like both as groups of shares. It's important to note that, I mean, technology is a very wide description. If you think about the US shares, you have everything from Alphabet, which is, in search basically, to Amazon, which is in e-commerce and cloud computing, to NVIDIA, which designs semiconductor chips. So, all these companies are seen as tech, but they do quite different things. And in the case of China, some of them do more similar things, but there are also differences. I mean, Tencent is very much a social media app that became an everything app. Alibaba, again, is cloud computing and e-commerce. Meituan is food delivery mostly. So also quite different things. I like both categories. I would be selective in which companies to buy, but I like all three of the Chinese companies: Tencent, Alibaba, Meituan, the big three tech companies in China. And when it comes to the US at the moment, my favorite is Alphabet. There's some concern regarding AI agents. And if people are rather going to ask a ChatGPT or an AI agent versus putting in a query in Google and searching the internet, so potentially that could be bad for the Google business in Alphabet. I don't see necessarily that that's going to be the death knell for search. So I quite like Alphabet at the current share price of the US tech companies.
Okay, well, let's get into small caps. Please give me insight on capital appreciation and City Launch. I know that generally your panels only watch the big shares, but Capitec was not long ago a small cap. Zwelakhe, I'll give you City Lodge and JP capital appreciation. Zwelakhe, what's your take on City Lodge?
Yeah, look, I mean, if I look at the price, it's pulled back probably from around 5 Rand to around 4 Rand, roughly. It's trading at about 11 times to 12 times. I think the big challenge that, or what has deflated the sales, is the fact that the GNU seem to be wobbling a bit, and maybe tourism and business travel kind of slowed down. But I do think long term, I mean, it's a good business. They've moved away from the depth of COVID-19, low capacity utilization. They're back at a good place. So they'll tick along with the economy, but they're cyclical.
All right. Gents, another interesting one. No, actually, wait. JP, I did say capital appreciation. I'm too excited to go to Raubex. Your take on capital appreciation, and then we'll go to Raubex.
So they have some software specifically in the payment space, and they also sell the actual hardware, those machines that you tap, the pay machines. Some of it is proprietary, but most of the technology not necessarily. The payment space is exciting. But they're sort of like a cobbled together business when they listed as a SPAC, one of the few SPACs in South Africa, and then bought these different businesses. And then they have this interesting claim against WhatsApp when they built that COVID app, and then they went into litigation, which could be a positive surprise if they get some money from that. So yeah, an interesting one. Small cap, so I haven't looked at it closely, but I would say they still have significant cash on the balance sheet. Last time I looked, so there's some optionality. So let's see what they do with that cash. I wouldn't discard it if I did see it in someone's portfolio.
Okay, all right. Raubex, when a whistleblower report delays financial results, is it a sign of serious trouble or a company doing the right thing by hitting pause to investigate, sell, hold, or buy. And actually, quite interestingly, they did say that they don't think that the outcome of the investigation is going to affect the numbers that they had flagged in their trading statement. Zwelakhe.
Yeah, I mean, I'm always cautious about companies that have this kind of whistleblower stories and numbers that might change. So I'd be a little cautious. I mean, Raubex historically was a solid business, very well run. I don't know where the wheels came off, but let's see what the outcome of that would be. Generally, the companies hire the people who review these things, and they'll probably find nothing until the whistleblower comes out in full swing.
And this is really the last company I also expected to come out with something like this. As Zwelakhe says, it is well run. It's really been quite a favorite in that kind of construction space. At this, I mean, we did see the share price, I think, was down 9% on the day when they announced. JP, your sentiments on this company?
Yeah, very difficult to say. Just about all the construction companies have been decimated. I mean, the latest one that's just about to wrap up after, I think, like 100 years is Murray and Roberts. So it just shows you how difficult construction has been. And construction always goes with tender. You always tender in construction. When you hear the word tender, the red lights should start flashing, because whenever the word tender in South Africa is mentioned, there's a chance for some funny business. So hopefully there is no funny business in the case of Raubex. They do have a very good reputation. And hopefully by the end of this whole story, the reputation will be intact.
All right. Gents, we do have to go to your stock picks. A lot of questions that still came through, but these will be answered tomorrow. Simon will be back with Stockwatch tomorrow. Well, that is all. No, that's not all. Your stock picks, guys. Yeah, my brain today. I don't know where it is, guys. It's all budget fatigue.
We got off the hook.
It's budget fatigue. So, like, your stock pick for today.
I'm picking Capitec. I think I know the valuation is a bit stretched. I think it's a well-run business that is transitioning into business banking. I think they can deliver amazing performance in that area as well. I think I like the strategy. I like the execution. I think the valuation might be a bit toppish now, but I still think long-term it should be a good business.
All right. JP, you said that your stock pick for today is Chinese counter.
Correct. So we spoke about the tech stocks earlier, but I'm choosing a Chinese consumer stock. Now, Zenate, we're heading into winter, so people are going to take out their puffer jackets, and the most well-known puffer jacket brand in South Africa is K-Way. And internationally, you have brands like Patagonia and First Descent, and if you are ultra rich, some people even have Moncler puffer jackets. But another puffer jacket brand you might not have heard about is Bosideng. It's China's leading puffer jacket brand and leading winter apparel brand. So winters in China can be hectic. Obviously, winters over December, January in China, you need to get your Bosideng clothing and be nice and warm. And they're doing very well. They're selling the clothing, going into not just winter clothing, but more summer and active wear and clothing to protect you against the sun, which is also very important for your skin. So if you take out your puffer jacket out of your closet this winter, I would say think about putting some money into Bosideng and investing in China's main puffer jacket brand. Okay,
and I love a good puffer jacket. Thank you so much for your time and for your insights today, gents. Really, really appreciate it. That is all for tonight's Stockwatch. Thanks to our guest, Jean Pierre Verster from Protea Capital Management and Zwelakhe Mnguni from Benguela Global Fund Managers. Up next, The Close. Stay watching.